The hidden method thousands use to unlock free bonus money. 1. Understanding the legal meaning of direct deposit. Banks define a direct deposit as an electronic transfer originating from an employer or government agency into a personal account. This typically includes payroll, retirement disbursements, and governmental benefits. The hook is that most individuals assume these requirements are rigid, yet the operational backend reveals structural flexibility. So what does that actually mean? It means banks frequently code certain external transfers as qualifying deposits even when they do not originate from formal employment. The problem is that the public believes they are locked out of bonus programs without a conventional job. The action begins with understanding how banks classify incoming transfers. Footnote: this section establishes the baseline definition of direct deposit and the misconceptions surrounding it. 2. Push transfers from existing accounts. A push transfer occurs when an individual logs into an existing external bank or brokerage platform and sends funds into a newly opened account. This differs from a pull transfer, where the new institution retrieves the funds. Push transfers sometimes code as employer-originated deposits, especially within welcome bonus frameworks. The tease lies in its simplicity. Individuals regularly overlook this option, even though it requires no business entity or specialized tools. The reveal is that certain financial institutions treat these transfers as qualifying direct deposits despite what the fine print suggests. Footnote: this section explains how push transfers from external accounts may mimic payroll deposits during bank coding. 3. Transfers from a business checking account. Business checking accounts generate transfers that resemble employer wage payments because they originate from an account type typically used to disburse payroll. Anyone may lawfully form a basic business entity, obtain an employer identification number, and open a commercial banking account. When the entity transfers funds to the individual, the receiving institution frequently codes the transfer as an employer payment. So what does that actually mean? It means an individual can replicate the appearance of wage activity without a traditional workplace. The empathy moment arises from recognizing that many self-employed individuals feel excluded from financial incentives that depend on payroll classification. The action is to establish a simple business framework and leverage its structural advantages. Footnote: this section outlines why business-originated transfers emulate employer payroll within bank recognition systems. 4. Government-coded payments through Treasury systems. Transactions originating from the United States Treasury, such as the redemption of short-term government securities, code as government disbursements and therefore qualify as legitimate direct deposits. Individuals may purchase short-term obligations and receive repayment directly into the target account. This repayment is recognized as a government transfer. The reveal is critical. This is not a workaround, but a fully compliant financial activity recognized across all institutions. So what does that actually mean? It means the strictest banks still classify the inflow as an authentic direct deposit because its origin is governmental. The trust component is built through the authoritative nature of government-coded transfers. Footnote: this section highlights why returns from Treasury obligations meet institutional criteria for direct deposits. 5. Pattern internal transfers mimicking payroll cycles. Although banks assert that transfers between an individual's own accounts do not count as direct deposits, system behavior reveals exceptions. When recurring transfers are executed on a bi-weekly cycle, especially on widely recognized payroll days, they may be interpreted algorithmically as wage activity. The pattern, timing, and repetition shape classification outcomes. The tease is that this method appears almost too simple, Yet the system architecture is built to recognize payroll cadence rather than human intent. The action involves setting up structured, bi-weekly Friday transfers for several cycles to mirror employment patterns. Footnote: this section explains how pattern transfers may trigger payroll-like coding through algorithmic interpretation. 6. Using formal payroll systems to pay yourself. A fully legitimate method involves operating a business entity and processing payroll through a recognized payroll service. The entity pays the owner as an employee, generating authentic employer-originated deposits. This is the most reliable method because it mirrors the standard process used by actual employers and therefore satisfies all institutional criteria. So what does that actually mean? It means an individual, acting through a business, can create genuine payroll deposits that qualify for every financial institution's bonus requirements. The action step is clear. For those already engaged in entrepreneurial activity, formal payroll provides both compliance and strategic advantage. Footnote: this section describes how formal payroll systems generate indisputable direct deposits for any banking requirement. 7. Regulatory and practical considerations. Bonus payments constitute taxable income and will generate informational reporting at the end of the tax year. Institutions may revoke bonuses if accounts are closed prematurely, typically within a 6-month window. Additionally, financial institutions evaluate applicants through banking history systems that record overdrafts and account closures. The empathy point is that individuals often unknowingly sabotage eligibility through avoidable account mismanagement. The action is to maintain clean banking practices and document all bonus-related activity. Footnote: this section identifies legal and procedural obligations associated with earning bank bonuses.